This is Michael Neuenschwander with Outlook Wealth Advisors, back with you on another video today. In a previous video, we had talked about different risks that needed to be addressed as you plan for and approach retirement. One of those risks had to do with life insurance as a useful tool for that protection. Today, as promised in that video, we're going to take a little bit deeper dive on 3 reasons it may still make sense to have life insurance even in retirement. So first and foremost, obviously, life insurance has some unique attributes to it when it comes to both the way it's invested, but also from the tax-deferred nature of the way cash can build up, but then the tax-free nature of the death benefit. So many people get to a point in their life where they feel like their assets and income are sufficient to do without life insurance in the traditional sense. And that may be true for many people. As the kids have grown, as the mortgage is paid off, you say, well, why should I keep paying money for life insurance? And what that idea may overlook, though, is what are some of the other potential reasons life insurance may still be a good tool for some people. So one particular scenario that we come across quite often, though, is when we look at that picture of retirement, and many of you may have done something similar, when you begin to add up what you're going to receive in Social Security or pension compared to your assets, you look and say, you know what, we should be fine, we don't need life insurance. The question that comes up in that instance, though, is what if something happened to one of you way too soon? And depending on the differences in Social Security, in many instances, if you both had a good career, your Social Securities may almost be equal. So it says if that gets cut in half because one of you were to pass away, is the surviving spouse still in the same or still in good financial shape? Or might there be a need, at least for early in retirement, to still have some life insurance? Because if something bad happens 20 years down the road and you've had 20 years of enjoying your time in retirement together, 20 years of income, it may be a non-issue. But if something happened in the first few years, that may be a totally different story. So another reason to consider life insurance in retirement is also because life insurance can address the long-term care you need. Now, we'll have a separate video again where we'll touch on different ways long-term care can be addressed, but one of the interesting attributes of most life insurance today is they will let you use that death benefit early if the need for long-term care should come up. So it becomes another resource, another bucket of tax-free money to help offset, that cost. And a third reason that may be beneficial for life insurance, even in retirement, has to do with taxes. The nature of life insurance, as we already touched on, is the death benefit is always tax-free. However, the buildup of cash inside the policy is also tax-deferred, but it can be accessed tax-free through a loan to yourself. And this is a strategy that's basically different than your normal way of looking at life insurance. Instead of saying what's the least amount of money I can pay for the highest death benefit, you're looking to say, how can I build up the cash, typically linked to the S&P 500, as much as possible, so that therefore I have a tax-free place to withdraw money in retirement. So for many people, that may not be the first thing you look at, for how to have tax-free income in retirement, but it may be a good strategy if you've already done the typical things such as Roth IRAs, Roth 401ks, Roth conversions, etc. And one final extra little bonus, if you will, on a reason you may want to consider life insurance is if the majority of your retirement accounts are still in IRAs. And even if you were doing some tax planning and some Roth conversions, you say, we simply have too much in IRAs to really eliminate or reduce it significantly. Well, because of the tax-free nature of life insurance, it's a great tool when it comes to estate planning, if you're subject to estate tax, but also it's a great tool for paying that income tax that will ultimately be due on those retirement accounts. Because under the current rules today, if you leave money in a retirement account to beneficiaries other than your spouse, so primarily the kids, they only have 10 years to empty that entire account. And in many cases, that says one of the biggest beneficiaries of having to take that money out quicker is the IRS and not the family. And life insurance can make a pretty efficient way to make sure that the IRS bill is settled without having to come up with it dollar for dollar directly out of your own assets. So while the traditional thinking on life insurance is simply for income protection or protecting if something happened too soon, in reality, it may be a much more versatile or important part of somebody's overall retirement and estate plan. So if you do have questions about whether insurance strategies are appropriate for you or where they may fit in your overall retirement and tax strategy, make sure to subscribe to the channel, or better yet, simply reach out to us at info@outlookwealth.com.